Welcome to CEO Money. I'm Michael Yorba. Thanks for joining us. I've got Joel Ross, the Ross Rant, on the show with me today. He is the CEO of Citadel Realty Advisors. Joel, welcome back to the show.
Thank you.
All right. Using pretty much your words, you guessed the big decline in the market is past now with October. So I wanted to get your take from now on the elections, the Fed, Euro, and also what's going on with Ruth Bader Ginsburg. So lead us off. What do you think we're going to be doing now between, say, here and Christmas? What do you think is going to happen?
Well, first of all, I was kind of hoping that the Republicans might have held the House by one seat because I thought the economy was so terrific that it would overcome whatever there was going on else in other people's minds. Mm-hmm. And that didn't happen, obviously. So unfortunately, Nadler and Schiff and Maxine Waters are all going to create this chaos, which is just going to waste time and get everybody upset for no reason.
Let me get in there with that, because you mentioned some stuff that's been first and foremost on my mind. Maxine Waters in charge of the money for the government, do you think that's going to fly with Wall Street too well?
No. I guess, I'm guessing because I don't really know, but my assumption is she can have hearings and she can do whatever she wants to do, but nothing's going to change because she has no ability to get anything changed. Congress doesn't really regulate unless they pass legislation. And so the Senate and Trump are never going to let her actually do anything. The problem is she's going to call up Jamie Dimon and whoever else and drag him in front of the cameras, and the press is going to go, aha, crooks, whatever they're going to do. And it's just going to be disruptive, and the press will love it. And that's not helpful. But as far as regulation, the Fed really regulates the banks. Hmm. And so the Fed isn't going to really pay any attention to Maxine Waters, nor is anybody else except the press and the left.
What about individual investors having a feeling of like, there is really not, Wilbur, has proven himself as a businessman, and he's in there working with Trump on this stuff. But it just gives me I don't see her as a podium I can or somebody I can rally around to give me faith in the continued growth of the economy. If she's in there with throwing the disruptive position she's thrown in the past, like telling people to, metaphorically speaking, mob people that you don't like. That just doesn't work for me.
Well, and I agree with you completely, and that's the one thing I worry about. But my sense is, and again, I don't know, we'll have to see. Okay. My sense is the street doesn't pay attention to Maxine Waters other than that she's a pain and an annoyance. And I think most sophisticated investors aren't going to pay attention to all her noise and garbage. It's going to be more of the press and that with the public, and maybe the retail investor goes, oh my goodness, but Obama painted the banks as crooks and terrible and all this other stuff, and we got through it after they levied all those ridiculous fines on the banks. Well, there's not much they can really do. Obama could do things with Holder because they controlled regulation, but Trump and the Senate have a veto, and Trump and the Fed really control regulation. So at the end of the day, I don't think much is going to happen except a lot of noise. And Nadler says he's going to go after Kavanaugh. That's just ridiculous, because now two of the women are up for potentially being charged with felonies. There's a guy who showed up who told the committee investigators that he's really the one who jumped Ford, and he looks like Kavanaugh. So this is more noise. And Schiff says he's going to reopen the Russia investigation, even though Mueller is finishing the Russia investigation and there's no evidence of any collusion. So I believe at the end of the day, most people don't want to hear it. They don't really want to hear about Russia anymore. They don't really want to hear about Kavanaugh anymore. And now that Ginsburg is apparently badly injured from the fall, I'm assuming that the focus is going to be on when is Ginsburg going to actually retire? And then do we start on the next circus with the next appointment to the Supreme Court, which it will be a real circus, because once Trump gets to name another Supreme Court justice, probably for the next 30 years, Trump's people will be in control of the Supreme Court decisions. And the left is going to go berserk. So, to me, it's just a lot of noise, and 2020 election efforts are going to start not too long from now. And I think the public is going to just get fed up with listening to a lot of the garbage that the Democrats in Congress are going to try and do. So at the end of the day, does it affect investors? Probably not, because the market went up so much during this whole Mueller thing and all the other stuff that was going on. So in terms of the stock market, no. The problem is, I don't know where executive authority ends that Trump can issue executive orders and get things done, and where he has to come to Congress. And the one place that Pelosi can create real chaos is the budget. And that's going to be a really bad scene. And so I assume the government will get shut down next round on the budget. I'll be amazed if it doesn't. That's not good for the market. It's not good for the economy. So overall, I don't know. I mean, it would have been far, far better for the economy and for investors to have a Republican-controlled House than to have the left wing control the House. Then you got the issue of who's really going to be Speaker. Is Nancy going to give it up after 6 months? Probably not, because I think her ego is so involved in it. So you got the Democrats fighting, and when they're fighting, the far left is going to come up with all kinds of stuff. So none of it's good, let's put it that way. But is it going to badly affect the economy? I don't think so, because it's really all about the Fed and how fast is the Fed going to raise. And my sense is things are going to slow down somewhat next year, which doesn't mean it's going to be bad. But we had 24% growth in earnings this year. That was partially due to the tax cuts. So next year, maybe it's 10%, 12%, whatever. That's pretty damn good.
Yeah.
So the Fed may say, well, things are not running as fast as they were. So maybe in the June quarter next year, they don't raise. Maybe they say, you know what? Things are slowing down. Inflation's still not really bad. Maybe it's 2.25%. And maybe they'll slow down, because I think not just Trump, but I think a lot of other people are putting pressure on them to ease up a little bit. So I think that's more important than whatever the Democrats do in Congress.
Okay. You also wanted to talk about, I mean, do you have any more comments on the Fed before we move on to the euro?
No.
Okay.
I mean, I think the Fed's doing what they should have done so far. It's just when they stop is the issue.
Got it. And we'll wait. We'll see what happens with that. Let me pull up the bonds and take a peek at it and see what I think there. But you wanted to talk about the euro, and I'm very interested in that. I do business in Europe, and I plan on doing a lot more business in Europe. And so this is going to affect some of the stuff that I do business with. So please tell me your thoughts about what's going on with that.
Well, to me, the biggest thing that's going on is Merkel is done. She hasn't resigned yet.
That's right.
Other than from her party, but they're already jockeying for who's going to head the party. They're already jockeying, I'm sure, in the EU as to who's going to take her place, because for the last, 12 years or whatever it is, she's run the EU. The Germans and she have run the EU. Now she's going to be gone, and who's going to fill that gap? What's going to be their policies? Clearly, the German voters are moved more right, and because of the refugee situation. So I think it's more of nobody knows what's next, and sort of the stability of the EU, because Merkel was there for so long, is going to be gone in a year or less or more. It's hard to judge when that happens. At the same time, you got Brexit, which is still unclear where that's going to end up. And at the same time, you have Italy telling the EU in Brussels, we don't really care what you say. This is what we're doing. And the EU saying to Italy, well, we care and we're going to fine you or do whatever they do. And probably, I'm guessing that Hungary and Poland, Austria, which have right-wing governments, which are anti-EU to some extent, maybe sitting there watching this, and maybe they're going to go, you know what, if Italy gets away with it, let's see what we can do. And you don't have real leadership, and you got Brexit. So I don't know what happens in the EU over the next year or two. And so when you have no real leadership and uncertainty, and you got rebellious governments, hard to judge where all that's going, and their economies are not doing that well yet.
Well, the euro's been trending lower here as of recent, since February. I've got a weekly chart up here, and it's been trending lower. Do you expect that there will be more repatriation of funds faster back into the United States? Not just U.S. companies trying to get out of the euro, but foreign investors trying to find a safer haven with some of the chaos that could happen and the uncertainty that's going on over there?
Absolutely. I think the private equity funds, I don't think things worked out quite, they didn't work out badly for them, but I don't think they worked out quite as well as they thought, buying bad debt, et cetera. And they've got a lot of money sitting over there, and it's probably not going to be a good time to keep a lot of money sitting over there. So I think they will bring some money back. The companies, if they see happening what I think they're going to see happening, are going to say, wait a minute, why are we sitting on 200 billion or 300 billion or whatever over in Europe? We can put it to work in the U.S. where the economy is still strong. And individuals, I'm sure, have already started moving money. I mean, guys in Europe are sitting there going, this is not a pretty picture. Right. And certainly in Italy and France, some other places, they've been moving money for a long time, and I think they'll probably keep moving money. So for the U.S., all this is good, except at some point, if Europe starts to get bad, that's not a good thing for the U.S. economy, because they're important to us. Mm-hmm. And I'm guessing Brexit's going to get worked out, but I don't think anybody's really sure right now.
The only thing that I think of it as an investor point of view is wait for a bottom to form, and then, as Rothschild said, buy when the blood runs deep in the streets.
Right, but in Europe, I don't know when the bottom is.
I don't either, but we certainly know what it looks like when it's a bloodbath. You and I have been through enough of these to see that. But I get it. The trend for now, potentially higher U.S. dollar based on the flight of currency or funds from Europe because of the uncertainty, the political landscape, maybe even undermining the foundation of what's going on there economically. It seems to me, once again, the U.S. could be the last vestige of safe haven for a lot of investments, rather not just the stock market and bonds aren't really performing as, they're not at a good enough rate for people to do that. It seems to me that this would make foreign investment in some of our private equity markets, we would probably end up with more dry powder in the private equity markets because of lack of a comfortable place to put the money. It seemed, or do you think I'm just off base on that?
No, I think you're absolutely right. and it's not just Europe. With the high dollar, the emerging market countries are in trouble because they issued dollar-based bonds. With the China economy slowing down, emerging markets generally are in the business of commodities. And so there's slower growth in China and the dollar's higher, and already there are a number of emerging markets in trouble. You have countries like Pakistan who took, I don't remember the number, but tens of billions of dollars from China for their Silk Road program, and now have no way of paying it back. And other countries are starting to look at all that Chinese infrastructure money and going, wait a minute, we just got into a debt trap. And that's a place where maybe some bad things could happen over the next 2 or 3 years, depending on how that plays out. The IMF can't bail out Pakistan and everybody else. So I don't know whether that's the next financial crisis. It could be. Hard to say, which I don't want to take time in today's interview, but at some point we should talk about the potential financial crisis pending in pension plans in the U.S. If you look at all the states that have big unfunded pension liabilities, and now they're taking money from general revenue to pay pension payments. So police, fire, infrastructure isn't getting done in a lot of places. That's a pending and growing financial crisis we can talk about another time.
Yeah, I happened to talk to somebody on the show the other day about what was going on with that industry sector, the retirement plans, let alone the pensions, of what's happening as we get into, say, 2030, how that's going to stack up. That doesn't look good. But the other, another person I was speaking to is very much into the markets, was saying that we're at a 100-year low in our commodity prices right now. And that's generally when you get, I mean, it's a round number, and that's generally when you get some type of turnaround in that industry sector, in the commodity industries, and they're looking for a resurgence of commodities. Now, granted, it's closely tied mainly with the U.S. dollar and our inflation rate, but that's kind of what they were thinking, that we'll probably end up seeing at least a bottoming formation at this point in the commodity industry.
That I don't follow commodities. That's possible, and maybe if Trump and Xi do some kind of deal at the end of this month and it turns into a real deal over the next 6 months, which who knows? I think they will do something because they both need to do something. And maybe China economy starts to recover and then they start buying commodities again, and then maybe it's okay. The problem is there's so many black swans around now.
Yep.
It's impossible to know where all this is going. Pardon me.
It is. All right, and we can drive down into those other statements, but you wanted to talk before we close out about Ruth Bader Ginsburg.
Yeah, I mean, she fell this morning, broke 3 ribs. She's 85. She had pancreatic cancer, which she's had a remission of, apparently. But the woman was not well. At 85, when you start falling and breaking bones, that's usually a sign of deterioration beginning and life not to be lived much longer. I'm obviously generalizing. I'm not saying it applies to her, but that's sort of the progression of how it happens. So my guess is whether she can come back to work at all, whether she's forced to resign because she can't work over the next couple of months, there's, in my mind, no question Trump's going to get to appoint a replacement before the end of his first term. And the left is going to absolutely go out of their tree. And it's going to be another Kavanaugh circus or worse, no matter who Trump nominates. Doesn't make any difference who he nominates. But at the end of the day, that person will get confirmed now that the Republicans firmly control the Senate, and there's room for Susan Collins to vote no and Murkowski to vote no, and Jeff Flake's not there anymore. So whoever it is will get confirmed. and we'll have a more right-wing, I don't want to use right-wing, more conservative Supreme Court for the next 20 years, probably.
Got it. All right, Joel, anything else before we close out today?
No, I think that's about it.
Yeah,
There's just so much going on, it's hard to keep track.
I enjoy talking to you. You know, we get to get our opinions out with each other, and you know, from the numbers, it seems like other people like to hear it too. So I appreciate you coming back on the show.
My pleasure. Anytime.
All right. You've been watching CEO Money with Michael Yorba. Like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel.